All right. Hey everyone, Economic Ninja here. Hope you're doing well. We've got a story of the Federal Reserve is calling for an immediate lowering of rates within the week to lower rates next week amid recession concerns. Now we're going to talk about this because this is coming from a Fed governor, Mr. Dudley, and I did a handful of videos a couple of years ago describing how you can tell ahead of time what the Federal Reserve is about to do, what their next move is, and how serious that move is going to be. That's why I felt very confident in December of 21, making the call for everyone to go and immediately refinance their homes at lower rates to save themselves tens of thousands of dollars. So many people, thousands and thousands of people did that. And I've gotten emails over the years because it's very easy to tell what the Fed's about to do. You just have to understand how they do it. And how they do it, I've gotten emails by people that are like, you called the bottom of the interest rate cycle. They saved so much money. And the way you call it is the Federal Reserve governors start scuttlebutt. They start stories of their opinions. And then you start to see the majority of their opinions. So right now we're seeing Dudley calling for an interest rate drop next week, saying, hey, there's a recession coming really quick. They already have the data. We all know how bad things are. Then another person will say, I think we should hold off. You're probably going to see that person within about 10 days give that opinion, and we're going to report it here. Then you're going to have another person, a Fed governor, come out and say, you know what, I think we should lower rates too. Powell comes out and makes the announcement. All right. And right before that, the head of the Federal Reserve right now is Jerome Powell, will come out and say, after all the governors have given their thoughts, and you'll see that it's a majority of which way they want to go. And the majority of Fed governors within the next 4 weeks are going to come out. You watch, you've heard it first. They're going to come out and a majority of them will say, lower rates now. We need it now. Then Jerome Powell will be asked, hey, all the governors are saying rate cuts. What do you think? And he'll say, we're data dependent, stand by. A little bit more time will go by. Then he'll go, we're dropping rates. And it is going to cause chaos in markets. We'll talk about that in a second. Before we start the story, I am doing a meetup in Denver. If you want, there is an email going out on the email list of the location. It's down near the convention center. It's tonight from 7:30 to 9. You will get an email with the exact location around this afternoon within about 3 hours. So if you want to sign up for the newsletter, if you're in the Denver area, come check it out. We'll hang out, answer your questions. We're going to have fun. Also tonight, there's, I think, 25 or 30 slots left for the free cryptocurrency investment AMA. If you want to learn, ask us whatever questions. I got a team here answering questions of how to buy crypto, how to do it, how to secure it, all that stuff, how to trade it. We'll give you all kinds of free advice, or not advice, but tips of how we've crushed it. None of it's financial advice, but I guess when it comes to having a really strong password and using an RFID chip to secure a key to secure your accounts, just like Facebook, well, that's just solid advice. Not financial advice, that's just life advice. All right, this story is out of investing.com, and it's entitled Fed's Dudley Now Calling for Fed Rate Cut Next Week Amid Recession Concerns. And the one thing that should concern you is when the Fed lowers rates, before a actual drop in, well-documented drop in the real estate sector and the stock market, like what happened in mid-2006, you are going to have wild speculation, and it is going to cause a wave of inflation that you have not experienced yet. And it is coming. Former New York Federal Reserve President Bill Dudley on Wednesday called for the Fed to cut rates as soon as next week amid recession concerns. And I apologize. I want to tell you the first part of that cycle is past Fed governors, which he is. It's past Fed governors, and then what happens is the press focuses on current Fed governors, and the current Fed governors start giving their rate cuts, right? So because they're all still friends, they all still work together. It doesn't matter if you're a current Fed governor or a past one. The past ones start giving their opinions, then it moves into current Fed governors, then it moves to the chairman. It says here, Dudley said that this rate cut should come next week amid recession concerns, reversing his long-held view for the U.S. central bank to persist with its higher for longer rate regime. The facts have changed, he says, so I've changed my mind. The Fed should cut, preferably at next week's policy meeting, Dudley said in a Bloomberg Opt piece ahead of the Fed's 30th to 31st July policy meeting. For a long while, the strength of the US economy suggested the Fed wasn't doing enough to slow growth as the stock market surged and financial conditions remained loose. But those facts have now changed. Now, the Fed's efforts to cool the economy are having a visible effect, Dudley said, flagging the lower income households are feeling the impact of higher rates on their credit cards and auto loans at times when the labor market is cooling. The signs of slowing growth are appearing in the labor market, Dudley adds, expressing concerns about the 3-month average unemployment rate rising 0.43% from its low point in the prior 12 months, a rate that could spark a recession. The rate is now very close to the 0.5% threshold that, as identified by the sham rule, has invariably signaled a U.S. recession, the former New York Fed president said. Dudley's concerns about the labor market aren't without merit, as Fed Chairman Jerome Powell also signaled recently that softening in the labor market now warranted a closer eye. What they are doing is they are prepping you for the eventual dropping of rates, albeit only 25 basis points for 2 or 3 drops, which is going to bring us into the presidential election. They are hoping to cause a euphoria in the markets as people start to invest. You're going to see that cause the stock market to rise. You're going to see very, very short-term housing data come out showing that it's strong. It is not. Then you're going to have a whipsaw effect 3 months and 6 months after that, where data is going to show that the Fed has to spike rates. And you will end up seeing, after this cycle of these 2 or 3 drops in rates, you are going to see them raise rates like you have never seen them before, unless you were alive and investing in 1980 and 1981. The next measured move on interest rates will blow your mind. Type 1, if you understand what I'm talking about and agree and believe that's going to happen. Type 2, if you think that, no, we're done, we're at the top of the cycle, the Fed's going to start lowering rates significantly from here on out. Now, something that Powell said is elevated inflation is not the only risk we face. Said earlier this month in testimony before the Senate Banking Committee, noting that the labor market has cooled really significantly across so many measures. And remember, I've been saying that for a long time. The Fed wants you to lose your job. The one way to stop inflation is to take the money from the people. How do you take the money from the people? You take their job away fully, or you lower the amount of hours that they're working because the companies, the corporations are feeling the pressure. So the one thing companies do to change their balance sheet, like really fast overnight, especially publicly traded companies, is they lay people off or they lower their hours. And it's really easy to do that kind of stuff when companies have less product to sell. And that's another thing you have to remember. As the unemployment rises, that's a very 100% guaranteed sign that the economy is coming to a grinding halt because sales aren't coming in. If sales were coming in, it would be a no-brainer. Look at what just happened with Alphabet. Google's parent company, they reported earnings, and one thing that stalled was YouTube ad revenue. It's not because people are watching less YouTube. It's because less companies are advertising because they simply don't have it in their advertising budget because they're selling less goods. It's a catch-22 for companies to put money towards marketing or advertising, 2 totally different things. And if the dollars aren't coming in on sales, see, the consumer has ultimately slowed. Type 3, if you are spending less money on things that you don't need today as opposed to what you were doing a year or 2 ago. Just type 3 if that's you. I'm spending less money on things I don't need. It's because the cost of things that you do need are going up. And now, not everybody's in this category. However, everybody's in the category of higher prices. You could be a billionaire and be paying more for ribeye steak or filet mignon or whatever those billionaires are eating. My point being is higher prices, no one's immune from those, right, when they happen. However, there are certain people that just aren't affected. They're like, okay, well, I'm going to put a little bit less in the savings account. I don't care. I'm going to eat my filet mignon no matter what price it is. There are people that are that rich, they just don't care. By and large, the middle class is being completely wrecked, completely destroyed. And that's not only the biggest tax base, but it's also the biggest a group of spenders in the country. So when they feel the hurt, we see that absolute devastation in economic data, which leads to then this herd effect, this sheep effect of the sheep are falling off a cliff because they're all doing it together. And then it just exacerbates itself. The snowball gets bigger and bigger as it rolls down the hill faster and faster. Now here it says, inflation meanwhile continues to slow to the Fed's target. The Fed's preferred consumer price indicator, the core deflator for personal consumption expenditures, was up 2.6% in May from a year earlier, which is far above the central bank's 2% objective, Dudley asked. But they're taking so much crap out of it, we're all getting worked over way much more percentage basis because they're not including certain things, right? Dudley acknowledges the Fed may not want to cut rates soon and risk of inflation rising once again. While the sham rule isn't something that holds sway at the Fed's discussion table yet, at its meeting next week, the voting Fed members are expected to vote in favor of keeping rates unchanged in a range of 5.25% to 5.5%. Now, personally, and I'd love to hear your thoughts. Type 4, think they're going to lower rates next week. Type 5, if you believe they're not. I'm going to put in my best guess and say that they're not going to lower, but they're going to give wording and guidance to really get people thinking that they're going to pull the trigger next month, right? Regardless if there's a meeting or what, they can always hold emergency meetings and change rates. There are some people that believe they can't do that, but they can. Because we want to pull off these drops close enough to the election that the real data doesn't come out after the election. Hope you're getting something out of this. To say these are crazy times, type 10 if these are crazy times. Like, it's like jaw dropping. I cannot believe this is happening. Get the algo fired up. I hope you're fired up. I hope you see the opportunities. If you want to see some more opportunities into cryptocurrency, if you've always wanted to know more about it and feel safer about how to make investments in it that are safer and not risky and not scammy, free AMA tonight. The link down below. I think there's 30 slots left. Get your slot, and then once it's full, totally free. We're going to give you a lot of free information out of that, and we're going to hopefully change the minds of how people invest in crypto or how people take their gains, because there's a specific way of risk mitigation that will blow your mind. Hope you got something out of this. If you want to come see me in Denver tonight, 7:30, links down below for the newsletter. That email is going out like in 2 hours with the exact location, but it will be downtown right next to the convention center. Hope to see you there. We're going to have a lot of fun. The Economic Ninja is out.